What's going on, everyone? Today we've got Seth on the podcast. Seth, thank you for coming on. Pleasure to have you. We've obviously been in touch for quite a while, so I'm happy you could make the time and would love to maybe start with a little bit of your backstory and kind of how you got started in real estate.
Yeah, well, Kevin, first of all, thanks for having me on. Appreciate it. And yes, we've known each other now for, I don't even know, it's been 2 or 3 years. Um, so my backstory I was a firefighter paramedic for 22 years. I got into real estate probably maybe 8 or 9 years ago. And I got into it from a position of necessity of looking for something else because I had been doing firefighting and had a great career. But I got to a point when I started having kids that as everybody's feeling nowadays, that my paycheck just was not stretching it didn't stretch it like it once did, especially when you have kids. And so I was trying to figure out, my nature was to always just put my head down and work harder. And that is how it is for most people that are, I would say, blue collar workers or fire service people, police, nurses. It's just in your genes that's what you do. And the year that I really looked for something else. I had worked 1,000 hours of overtime that year, which that may not sound like a lot to somebody if they're working like 40-hour weeks, but in the fire service, that put me at the firehouse for 6 months straight that year. I mean, because we worked 24-hour shifts, we'd have 2 days off, and I was picking up 24-hour shifts all the time. And at the end of the year, my wife and I were, I wouldn't say having problems, but I mean, it was just like clearly I was burnt out, I was stressed. What's going on? And when I really stopped long enough to think about it, it was 6 months out of the 12 that I'd been at the station day and night. And I just realized that at that point, my body wasn't going to be able to continue to do that. My relationship wasn't going to be able to continue to tolerate years like that. Now we're adding kids into the mix. So I had to look for something else. And I had been always liked real estate, but I didn't know anybody locally that was doing it. I really didn't know how to crack the code and figure out how to get into that. And it's very tough if you don't know anything. And I happened to reconnect with a guy that I went to college with. And when we lived together, I went into the fire service and he had gone to college, but he opted to become a realtor. And then I hadn't talked to him for 10 plus years. Well, then when we reconnected through social media, he was a multimillionaire doing courses on how to house flip houses. He was a hard money lender. He was wholesaling stuff. He was doing all kinds of things that I had never heard of before. But I was like, how did this guy go? How did we start at the same spot? And here I am struggling, and here he is a multimillionaire. So it was like, what happened? So I was able to get a hold of him, and we talked, and he kind of opened my eyes to some different things, and gave me some kind of next steps and action items to take. And I look back at it now, and he was really testing me to see how serious I was, because just like I'm sure you do, I get a lot of people all the time that want to talk about doing, I want to do what you do, or I want to do this or do that, and you can give somebody the smallest action item, and it seems like the biggest barrier where they don't like that. You just asking them to do something and then come back to you, like that stops them from really moving forward. And
Absolutely.
so he gave me 3 things to do, and I did those things, and that was kind of the start of it. He kind of guided me in the beginning on the initial steps, and let's say here we are 8 years later, and it's been a crazy ride.
Absolutely. If you don't mind sharing, because I think this is awesome, and most people start really small, but maybe sharing some of the details of the first deal that you actually did, that large multifamily, and kind of how you overcame the, hey, I need to start with a single family versus let's go buy 50 plus doors right off the bat.
Yeah, so because of the situation I was in, I already had a full-time job. When I got into real estate, I was just going to be a side hustle, some extra cash flow. I was just trying to make up the difference of hey, I don't have to go work overtime this week because I've got rental income coming in. And that was kind of how it started. And the guy that I originally talked to, part of the things that there was 3 things he told me to do. 2 of them was find a mentor or attend some local real estate meetups and then find a mentor. And so I did those things. I attended local meetups for a while. Then I connected with some people like-minded that we became friends. And out of that, I met with a contractor that was, he had been a W-2 guy, left, became a GC, was flipping houses and had a rental portfolio. And his biggest pain point at that time was he could not find a project manager that would run his flip business because he was trying to expand. And so that was like the bottleneck for him, was if it wasn't him going to all the sites, he couldn't find anybody else that would be, that would care about it as much as he does. And that was causing him to not be able to grow. So I said, well, look, I've got a construction background, fire code and building code enforcement background. Like, let me help you. So I worked for him basically for free for about 14 months, managing his flips, and then ultimately managing his rental portfolio of about 22 doors, some single family, some small multi. And through that, I learned this is like a job. Like, this is literally another job that I do not like. I have a job. I don't want another job. And so it was that, but it was also learning the backside of things, of like the struggle of cash flow and maintenance requests, and like, being able to pay for things and paying more now to make it right versus paying less now and doing it cheap only to revisit it again in 6 months. I learned a lot in those 14 months, and it taught me that, one, I needed to go bigger. If I wanted to actually be able to afford to pay people to manage it or to do the maintenance where it wasn't going to be a job, I had to go bigger. And then it gave me a resume when I went to the bank, or I went to 6 banks before that 6th one said yes, but it gave me a resume to be able to go to them and kind of present my skills, because prior to that I'd never owned any rental property. And the only thing that I could go to when I went to a lender was to bank on the experiences I'd gained in those 14 months. So yeah, like you said, I mean, call it crazy. I had a lot of confidence in myself and what I thought I could do. But that was really what I knew. I had to go big, and I knew I had to go big enough to where it could have enough cash flow to pay, pay for itself, but also pay for somebody else to do the managing and help with the work. So I went and found the biggest thing that the money I could get together could afford, and that was that 50 unit, like you said. Went to 6 banks. The 6th one finally said, yeah, we'll do the loan. The way I funded that deal was through the real estate meetup. I found an investor he was an older guy. He was in his early 60s, mid 60s maybe. And we, just became friends over time going to that. And, talking to him, I realized he had never done a cash out refi on some of the rentals he had. And he had, a decent sized portfolio, and he had almost no debt on it. And he was getting really good cash flow, but he was, I talked to him about doing this, do a cash out refi. We could take the proceeds you have, plus I've got home equity in my home. I could do a HELOC. We could combine our money together and go buy this, large property. And, again, he was crazy enough to do it. So we put together 20% of the down payment for that. And then the week before closing, or the week of closing, the bank came back and said, hey, we need 25%, not just 20. Which, if you've been doing this long enough, you've been around banks that have changed the terms, or you've seen it happen to other people. And so I ended up going to a hard money lender that I knew, that I had met through the 14 months of working. I had met him. I went to him and said, hey, I need 75 grand to be able to close, and I need it like tomorrow. And through our relationship, he trusted me to be able to do it, because most lenders like that, or private money lenders, want to be in first position on rental properties. And this guy was he was like, yeah, I'll take second position. And I just trust that you're going to, do what you say. And that was how I bought the first one.
Wow. Yeah, that's an awesome story. And I'm sure people will definitely, I think kind of the point too is to overcome the fears. You don't have to necessarily start with, a single family or a duplex, but you also shared how you kind of built the foundation over those 14 months of working with another investor. So I think all that's super important. As far as sharing, like, kind of where you guys are now, I know you have a ton of different projects going on, development, partnerships, but just to give people an idea of how fast, in the past 8 years you guys have really scaled, just maybe an overview of where you guys are at.
Yeah, so we did, again, I'm giving you the super short version of these stories. There's a lot of lessons learned and a lot of things that if I could go back and do it over again, I would. But, I bought the first one. We did all the construction renovation, value add to that. We refinanced it in 14 months and pulled out. We netted about $1 million. And then I took the proceeds that I had earned from that, and I went and bought another 38 unit. And I did the same thing there. And as I was kind of working through the plan on that second one, I thought, man, all of a sudden this could really be almost a career and replace my income, because I made so much on the first deal that, I was like, if I could do that again on the second one, like, that's more money. I just made more money in those 2 deals than I would have made in like 15 years working at the firehouse. I was making good money at the firehouse, but I wasn't making that kind of money in that short amount of time. So, so I wanted to continue to expand and do different things. And I realized that, syndicating bigger deals was probably the way that I could do that. But, that sounds, it's easier said than done, because as soon as, I can decide that, but then it's like, well, how do you buy these things? Right. And so it takes a long time to get the relationships built, for people to trust you, to be able to put in hundreds of thousands of dollars, if not millions of dollars, depending on what you're raising. And so that took some time, but once we started getting some ground, we went for, we bought, God, I don't even know. I don't know how many deals we bought in the next few years after that. But all in all now, like company wide, for instance, we have just under 2,000 doors. We've got multiple ground up developments going on. And we're just navigating the market like everybody else. Luckily, most of our stuff is in Central Ohio. We've got some stuff in other states. But we went deep in our local market versus spreading out over like 7 different markets. We just try to stay laser focused on really 3 specific markets. And that's really it. And I think, that was the turning point for me, was realizing that, hey, if I want to keep everything to myself, I'm only going to be able to do these 2 deals. And then at some point I could do a third and kind of grow slower. But when I saw like what I thought it could be, I thought, man, I would rather have, a chunk of something, and that chunk be worth more. Again, if I could go buy 3 single family homes and own all of it, or I could go buy, 30 apartments and own 50% of it, that 50% is more valuable than the 3 houses, right? Even though I don't have 100% ownership, but we've maintained control of all of our stuff. So we're vertically integrated with our management and our construction. And again, all of those are probably an hour-long show on each topic on how that happened, but that's where we're at today.
Awesome. Yeah, I appreciate you sharing that. As far as scaling consistently and just the growth that you guys have experienced, are there any like key habits that early on you can think of that maybe you implemented that allowed you to build the momentum?
So I would say that and I feel like it's probably everybody says it at this point, but I still find people that haven't read it. But the book Who Not How by Dan Sullivan, when I read that back when it first came out, it really changed my mindset, because being a fireman and being a blue collar guy, being the guy that has to fix it, or cutting your own grass, or, everything had to be done by me, because that's just how I was trained. That was the mindset that I'd grown up in. That was everything in the fire service was, just continue to reinforce that. When I realized that, there's, all of that is great, but for me to really exponentially grow, I have to not just only, exploit my time, but other people's time as well. And so bringing in the right people to do jobs for me or do things for me, I think is really the key thing that's helped us grow. And if your listeners haven't read that book, I encourage you to read it, because it really just shows you how, for instance, on my first deal, I was down there laying flooring, painting, doing drywall, installing outlets. I installed a bunch of windows. I was right alongside the contractors working, because one, out of necessity, I didn't have it funded correctly, and I didn't have the choice. But what I learned through that was, I could go down and I could hang drywall and I could do flooring, and for 8 hours, like that's what I did, right? I go home, I feel good about it, going to my kids, like, yeah, hard day's work. But what I was missing was I could have spent that 8 hours raising capital, or meeting with investors, or growing looking at other markets, or building relationships with people. And those things are like I can always find somebody to hang drywall, and I can always find somebody to lay flooring. I can't find somebody to do what I can do with relationship building and looking at deals and raising capital. And so, I had to basically put the tools down and recognize that, pay somebody else to do that work, so I could take that same 8 hours and go and do something that, would help 10x what we were doing. And I think that mentality has really been helpful, because now anytime something comes on my plate that I'm like, this is not in my lane, this is not in my box, I give it to somebody else. And there's some people I think out there that they can delegate everything to death and they don't actually end up doing anything. So you have to constantly weigh, if I'm going to delegate this to somebody else, or I'm going to pay somebody else to do it, then what am I doing with the time that I've just gained back, right? Like, for instance, for me, cutting my own grass. I cut my own grass for years. My dad would be, he passed away a couple years ago, but he'd roll over his grave knowing that I pay somebody now to cut my grass. But the point is, it would take me an hour and a half to cut my grass. Well, if I can take that hour and a half and I can apply it to something that makes me $1,000 or $500 or $100, but I paid a guy to cut my grass and it only cost me $20. I've traded that hour and a half. I paid somebody $20 to cut my grass, or $30, whatever number you want to apply to it. But I made, I 5X that the dollar, what I made. So that's where you have to kind of always be monitoring that, I think, and reevaluating it. But that is probably the number one thing that's helped us grow, is just understanding that and then just running full steam with it.
Absolutely. No, that's super powerful. Yeah, I love that book as well, so definitely recommend it. As far as where you guys are planning to kind of scale to, and some of the things that you've now had to, I'm sure, fill some more seats to grow to the next level that you guys want to be at. What does that kind of look like? Where do you guys want to go? Where are you headed? And what are some of those things?
Yeah, so definitely had to fill some key roles. That's one thing I would tell people as you scale, is that you outgrow people and companies and vendors maybe that you've used in the past. I think one of the biggest hires that we did in the last 12 months was we hired an asset manager, and he's really kind of become more of a COO for us, where has 25 years of experience. He's done ground up development. He's overseen thousands of apartments. He used to work for a company that had 1,200 employees, and he had, like, the only people that answered to him were managers. So he is by far, like, he can't go out and raise capital like we can. He can't go out and find the deals like we can, but he's really, really good at kind of like navigating the ship, right? And what it does is, again, hiring him and bringing him in, giving him some equity in deals, paying him well. It allows me to not have to work. I still keep an eye on those things, and I still am involved in those things, but I don't have to be, in the weeds. I don't have to be in the business. I have him now as a buffer between the business and me, and it frees me up to be able to, again, to go and build relationships and look for deals and do the different things that I do well. And so I think that's probably one of the biggest things as far as hiring goes. And where do we see ourselves? I mean, ultimately we've got 3 developments that are underway. One's going to break ground soon. But even like that one, for instance, I'll make, like, without getting into detail of it, because I don't know how much time we have, but we bought land for $4.5 million. We bought it at I think like 28,000 an acre. And it was 150 acres. We broke off 105 acres, and we're selling those 105 acres at 75,000 an acre. So to give you an idea, like, it's lucrative to be in land development, and there's a lot of risk that can be involved, but you can also mitigate a lot of that risk. So, I think our long-term goal is to get through these 3 developments, exit them, and if we exit them successfully, the amount of money that we'll have as a company to be able to go out and buy more deals or do bigger things is, I probably can't even understand that right now or put a number. I mean, I can only go off of the data that I'm looking at right now today. And I think that, for us, we have no like cap, right? So some people will be like, oh, I want to get to 1,000 doors or 5,000 doors or 10,000. I don't really know. I know what I do know is that all the big players that we follow that have thousands and thousands of doors that are, we are modeling our business after what they are doing. And it's not just one. I mean, we probably follow 10 of these large companies that have, 20,000 plus doors. We are modeling ourselves now after what they're doing, simply to be able to get to that level.
Yeah, absolutely. No, that makes a lot of sense. As far as hiring and putting some of those right people in the right seats, any tips there for even someone that's just looking for their first property manager all the way up to hiring maybe that COO position? Anything that's been helpful? I'm sure you've had to vet people and interview numerous different, people for those positions. Any tips there?
Yeah. So I think, if you're just looking for a property manager, there's a lot of things that you need a lot of questions you need to ask them and really understand their business and what their growth model is, because I feel like a lot of property managers, they'll take on anybody and they just want to grow, right? The more doors that they manage, the more profitable their business is. But I feel like a lot of them grow too quickly, and then, their portfolio might be, 2,000 doors, but they're only managing them at like a very poor level. But then there's other, like in Columbus, there's property managers that I know, guys I'm friends with, that they're very selective on where they'll manage. They won't manage in certain, rough areas or war zone areas or Class D areas or even some Class C areas. So kind of understanding their business model, what they're after, what are their long-term goals, how do they structure their finance, their billing, how do they, because again, you can go in with the best intentions and the best underwriting, but if they're not aligned with what you're trying to do, you're never going to achieve those returns. So you have to just kind of go in and, like I have a whole list of questions that I could share that you could ask a property manager. But as far as like hiring goes, of people that are going to work for you or work with you, I didn't used to do it, but there's a lot of personality tests on there. There's a disc assessments that you can do. There's some other, disc assessments more kind of, not, it's more like skills and like, your like what your personality type is. And then there's other ones out there that are more, kind of dive deeper than those do. And those, I think, are really the thing is like finding, if you're going to bring in somebody off the street to join your team, you want to make sure that they're going to fit with your culture. They're going to fit with your plan, like what, they're going to really buy in, that it's not just going to be an hourly job for them. And, I think that's the biggest thing I've learned is when I have a gut feeling about somebody, that's usually right. And like I said, now before we hire anybody, we make them take some of these personality tests and these disc assessments to kind of see where do they lie within the organization, because again, some people can get like, we know they're not going to be a fit for us, but we're not going to be a fit for them either. And the last thing we want to do is hire somebody, then them be miserable or hate the job or upset the culture that we've established over the years. So, those are really the big things. And, back to my original point of who, not how, I hire a lot of the vet out, right? So we brought in an HR company to kind of help us shore up some of our shortfalls on our infrastructure when we had our management company and the construction side of things, because they're experts and I'm not. I went from an investor to an employer to, it's just not my wheelhouse. So we brought in somebody that knows more than us and kind of taught us how to do that. And then a lot of people too have found, we haven't implemented 100% yet, but EOS, a lot of people, if you've read the book Traction, there's people that teach EOS or help you implement it into your business. And everybody I know that has fully implemented it into their business just raves about it and loves it. So whatever your structure is, you got to bring in some structure. And again, you can work hard and grind it out and figure it out on your own. Or you can just hire hire the third party people to come in and kind of help you, build that out much faster and the correct way, doing it right the first time.
100%. Yeah, I think 2 podcasts ago, company, slightly smaller than yours, but exactly what they had done, hired an EOS implementer to come into their company to actually help them put those things in place. So yeah, super valuable. Another question I had, and you're obviously from Central Ohio, bulk of the portfolios in Central Ohio, but now that you do have some projects in other markets and I'm sure looked at things across the country, why do you still love the Midwest so much? What are the components there that continue to drive you guys to investing in these markets?
I think, I'm from the Midwest, originally from North Dakota, and then I lived in Florida for about 8 or 9 years, and I've been in Columbus, Ohio since. But, I just think that it's predictable. I think it's kind of slow and steady wins the race. And, you're trying to, I would say that people that are, like if I lived in New Jersey, my only option would be to buy elsewhere. Or if I lived in a market that was not tenable for investments, like I have to look elsewhere. Well, we live in a market that we don't have to do that, right? We can find great deals locally. But it's just, to me, it's predictable. It's what we know. The Midwest has always seemed to kind of be, like I said, slow and steady. They're not having these huge upswings in rent growth when times are good, and then having these huge decels in rent drops when things go bad, like we've seen in some of the other kind of more well-known markets. And it's I don't know. I think that's probably the biggest reason is it checks those boxes. And a lot of people you can still get a pretty good price per door out here. Columbus obviously is getting pretty tough, and some of those the hot markets. But you go 30 minutes outside of Columbus, and you're still able to buy stuff at a reasonable price per door. And, when you're somebody that's from the East Coast or the West Coast, and when sometimes we talk to these folks and they want to invest with us and they can't believe what the price per door is that we're getting. And, and I had to reevaluate that as a local guy where I'm like, I can't believe somebody would pay this in Columbus for this, price per door. But like, it's my local mind not wanting to grow with what's happening around me, and you see it a lot with people that aren't following real estate all the time. They always complain about the housing market and it's only going up, but they said that 2 years ago too. But had they bought back then, now there'd be more equity in their home. And so it's, I don't know. I've stopped looking at the price per door, and it's more, does the financials work? And I feel like the financials and the basics, the fundamentals, if you will, they just work more or work better or more routinely in the Midwest than anywhere else.
Yeah, absolutely. Definitely agree. And obviously, living on the East Coast, I can certainly
Yeah.
see locally, price points to just basic comparisons of what's a unit rent for and what's the unit selling for. And yeah, absolutely. It's Midwest, specifically Central Ohio, where we're also buying very affordable. And yeah, a lot of those metrics stand out as well from the price per door. And that's just kind of a good indicator of like, where is this going to shake out from the beginning? But um, another question, you already kind of hit on a couple of these things about, hey, if I were to go back or had the opportunity to give someone advice just starting out, either, one of those two things, if you were to go back yourself or you were giving someone advice that's just starting out, what would you do differently or what would you kind of give as advice to that person?
I think trying to find somebody that you can learn from, whether it's a mentor or it's a group that you join or whatever. I mean, there was just nothing like when I wanted to get into multifamily, like there just wasn't a lot out there to teach you, and so, do I think it's smart for everybody to go out and buy a 50 unit apartment complex and kind of wing it? No, I don't think it's, it's probably smart for everybody to do that. But I think that if you can surround yourself with the right people that are doing it already, or, whether you pay for their time or you pay for their mastermind group or whatever that looks like, you got to get in the room with the right people. And even if you don't know what questions to ask, just be listening, and, and I'm not talking about getting into a room of people that are blowing smoke and really aren't doing what they're talking about. Somebody recently said a saying, it was not a guru, but a do-ru. You want to be in a room with people that are doing it, right? That are really doing what they're saying they're doing. They're in the trenches. And I think, and I feel like you can probably sniff that out pretty quickly. Maybe if you don't know anything, it's harder for you to tell or call BS on somebody. But as you kind of get, I don't know, that's the biggest thing that if I could have, I had a couple of mentors that I called on that first deal that gave me some guidance when I was in it. And had I not had those phone a friend conversations, things could have ended up differently for me. But, again, I had put myself in a position where if I failed, I was going to go bankrupt. I was going to lose this investor's money that he had worked very hard for and was a good friend of mine. And then I didn't fund that deal correctly. So I had to raise private capital after the closing that were basically straight loans to me. So I valued those people and my relationship with them as well. So it had to work, right? I mean,
Right.
it didn't matter if I was snaking toilets at 3 a.m. That first deal, it was going to work. And so I think that's really, if I could go back, is do anything you have to get in the right room with people, but then also like listen to what they say. Like I said, I give people action items before I'll even take a phone call with them for the most part, because I get people all the time that say, hey, I want to get into real estate, or I want to do what you're doing. And they say that, but then when they actually figure out what I'm doing and how in what we're, like the work that goes into it, then they back out pretty quickly. So I have found that giving people some action items before I even get on a call with them, it's a way for me to test them to see, are they actually serious or not? And a lot of people get weeded out just from me telling them to go read a book. I'll say, hey, read this book and then come back and talk to me. And that right there alone eliminates, I'd say 85% of the people that want to talk to me. And that's fine. I mean, but that's what I'm saying is get in the right room, listen to what the people that are doing what, I would say vet that they are actually doing what you want to be doing, that they're not just full of crap, and then do what they tell you, and don't, I get that a lot too, where I'll give somebody guidance. I'm sure you do. You give them guidance, say, hey, here's how I would underwrite this, or I would look at this, or have you considered this? And then what do? They immediately want to push back and be like, oh no, I don't think that's right. Well, then why are you asking me? Like what?
Yeah.
And so I think like, don't be that person, and I think, if you, most people I know in real estate or that are doing really big things, or, they want to learn, they love mentoring, they want to give back, but it's like finding the right person to do that in is what's hard.
Definitely, yeah. And I think maybe the double-edged sword to what you're saying, because I 100% agree. People want to do the thing, but they don't actually want to do the work to get there. And the cool part about that is, like you said, the 85% of the people that you talk to, that you give the go read this one book, and they can't even do that. It's the 15% though that are willing to take the consistent action that actually end up being successful. And I think the real nugget in that is it's not that hard to be successful. You just have to be consistently a hard worker for a long enough period of time, and luck will find you. And we've found that in our business just by continuing to have conversations, and eventually something checks out, and we might go for a couple weeks and look at just deal after deal that doesn't pencil, and then something sticks. So yeah, I think that's really the nugget, is the consistency and actually taking action over just talking about taking the action on the social media. So
Yeah, absolutely.
awesome. Well, Seth, I really appreciate you coming on here, and I'm sure this was, valuable for some of the listeners. If you don't mind sharing where people can get in touch with you to connect with you and your company and learn more about what you guys do, where the best place to do that would be.
So people can look us up on our website. It's www.thestreamgroups.com, or they can find me on social media. I'm on Facebook, Instagram, TikTok. We're on all of the platforms, and you can pretty much just pull up my name and find the profile. So connect with me there, or like I said, go through the website and you can email me, or reach out through the portal there, and it'll get to me, and then we can kind of go from there.
Awesome. Well, thanks again for coming on, Seth. We certainly hope to have you on again in the future.
Absolutely. Thank you.